Welcome to the Money Huddle, a podcast that explores financial topics for families and small business owners. Hosted by Michael Baker and Ross Marinell. All opinions expressed by Michael and Ross or any podcast guests are solely their own opinions and may not reflect the opinions of Planners Alliance. The podcast recording is for informational purposes only and should not be relied upon for investment decisions. Clients of Planners Alliance may maintain positions in securities discussed on the program.
Welcome to the Money Huddle. My name is Michael Baker, and I'm here with Ross Marinell. Ross, how you doing?
I'm doing great today. So, Michael, I got something special I want to talk about today.
All right, let's go for it.
So, I thought we should do a little bit of a look back on a blog post that you wrote a little over a year ago.
Okay.
Called 5 Reasons You Shouldn't Invest in Bitcoin.
Oh,
and
there's more than 5 now, I bet.
It's been enough time has passed that I think it's worth going back and revisiting some of these ideas.
So throwback.
Kind of digging in. Yeah, a little bit of a throwback podcast today, but I think a very timely talk. So why don't you go ahead and just dive in real quick and kind of explain what drove you to write that post in the first place?
Sure. So if my memory serves me, this was November 2018?
Yeah, it was just after Thanksgiving of 2017.
2017 Thanksgiving. So at that time, the cryptocurrency mania was kicking into high gear. We were having folks ask us questions about it. We were, you couldn't get out into the world and have regular conversation without somebody mentioning it.
It was everywhere.
It was everywhere. Even like my parents asked me about it, I remember. So I thought, well, I better try to get out in front of it. So, I put together, my thoughts on that topic and try to basically give some guidelines for why I didn't feel that it made sense as an investment.
Right. And so one of the reasons that you had cited for maybe taking a pause was reason number 1, and I'll just restate it here. It's not wise to invest in something you cannot explain.
Right.
Just dig in a little bit on that.
Well, obviously we work in this business day in and day out, and if you were to pick, a random company out of the S&P 500 and say, well, explain the ins and outs of that business. Well, what do they do? And we would very likely struggle with that. But here's the thing is when it comes to finding out the information required to understand if we felt that company was a sound investment, we would know how to go about that process.
Right.
Bitcoin, cryptocurrency, the blockchain, all of that is still very, very new. And, your average person didn't even understand what blockchain was, could not tell you what blockchain was. They just knew there's an asset out there called Bitcoin, and it's going up exponentially in value every day. I want some of that.
Right. So a lot of the interest was really just price movement driven.
Of course, like 100%. It was something that, you could look at and say, oh, you mean to tell me that just 3 weeks ago, this thing was worth 25% of what it's worth now. And at the beginning of the year, it was worth even less. So we were getting into full on like mania mode, I think.
So at the time that you wrote the post, you actually time stamped the price of Bitcoin. So the day you wrote that blog post, Bitcoin was priced at $9,537.
Wow, okay.
And so basically it had risen pretty significantly.
So I was early.
That point. You were a little early. But this became the Thanksgiving conversation at people's homes.
Sure. Well, that's where it, I think it really took on a life of its own because it was, the price movement had been, going up significantly before then. But Thanksgiving is when, young generations, older generations, get together, talk about what's going on in life. And I imagine a lot of young people were talking to their parents and their grandparents about Bitcoin and why they don't own any. And, so I think we talked about Josh Brown had made a mention that over that weekend, I think there was over 100,000 Coinbase accounts that were open.
So Coinbase being the most mainstream
Exchange in a U.S. based exchange for crypto assets or cryptocurrency, and so that was, I mean, it was just this explosion of new accounts that were opening up right at that time.
Right. It was taking over. And so that really, one of the most interesting things that caught my attention in the original blog post was this idea of the fear of missing out. And you kind of alluded it's a dangerous drug. And really, it's one of the most powerful behavioral biases that we have.
Yes.
Is seeing other people getting rich or believing other people are getting rich when you're not.
Oh, for sure. I mean, and the media, a lot of the financial media, mainstream media plays right into that, because they'll go and find the one person that's made $100 million, on Bitcoin, and they'll interview them on TV, and it was easy. I just threw money in, and presto, changeo. Now I'm going to go buy my Lamborghini. And, it did. There was a lot of people, I think, that were, had the FOMO, fear of missing out. And at the same time, a lot of recency bias. It's really hard when you look at what, recency bias is basically, a behavioral bias that we tend to weight most recent events or things that have happened recently more heavily in our mind than historical events. And so when you see something like Bitcoin that had gone from at one point I think 7 cents to $100, couple $100 to now, then it was worth all of a sudden 9,000 when I wrote the article, and I think it even went up to maybe 18,000-19,000.
So here's what I think.
You think it's going to go up forever?
There were projections that it was going to be 20,000 and then 50,000 and 100,000,
yeah.
and they would
to the moon.
Right, to the moon. And so what's I think is really interesting is, so from late November to basically the middle of December,
mm-hmm.
it peaks in price just over $19,000 a coin.
19,000, right.
So depending on when you purchased, if you did, you could have made a lot of money. But here's what I think is really incredible. That window was so short. You basically had a few weeks where if you invested in that mania and had the foresight to sell, you could have made significant money. But what happened if you didn't is today we're sitting here and the price of Bitcoin, I'm looking at a little over $4,000 a coin.
Right. So basically time, the timing matters. Like we don't advocate in any way timing markets, but a lot of times when you choose to get in makes an impact. And so, especially if you're not a long-term investor. So if you think of someone like that, they got in at Bitcoin right when it was at $10,000 and they wrote it up to 19, but they didn't sell and take gains off the table, and they held it all the way down to now 4. I mean, that's almost a significant loss of capital right there.
Right. And so to roll back to that time period, the advertisements and the discussion was everywhere.
Oh,
and you
yeah.
had actually screen grab an advertisement that you had received. This was just on, I think, your...
Yeah, it came over my phone. I remember seeing it on some type of social media, and it was talking about this is the Bitcoin IRA.
Right.
Oh, I just I saw this, and it just sent I just shuddered, because first of all, the crypto asset space is so new. I'm like, how is anyone even going to invest like qualified retirement dollars like an IRA in the Bitcoin, for one, because it's not a registered security.
It says triple your retirement.
Oh,
invest in a Bitcoin IRA. Oh, what is a Bitcoin IRA?
I don't know. And then that was even like worse. It said triple your retirement. So the back of my head, as someone who's got a securities license, and this, we work in a business that's very regulated. I thought there's no way this is on a level, because basically it's a Bitcoin IRA, and I'm like, what the freak is that? And then triple, I mean, your retirement. I mean, one could basically assume by looking at it that like, oh, you're going to triple your money all you got to do is buy one of these Bitcoin IRA things. And then it had like the cheesy like 5 gold stars. I mean, it looked like a legitimate advertisement, and I don't know that I want to know how many people got scammed on something.
And this is really where the sales and marketing just creates a urgency in the reader.
Oh yeah.
You feel like you're missing out on gains, easy money. And
Yeah.
it really it has a strong influence to propel action. Like you're like, oh my gosh, everyone's tripling their retirement accounts, but me.
Yes.
What am I going to do?
Ho hum. Here, I just own like boring old portfolios when everyone else, all the cool kids are getting into crypto assets.
Right. Which 2017, looking back now, was a really great stock
Beautiful
market
year.
Right. Beautiful year. But still at the end of that year, this mania really took wave, and everyone sort of lived it in real time where, we would look at each other and say, this is incredible. This is happening. I mean, we knew that we were living in a historic mania, that this doesn't come around every year.
Oh yeah. I mean, we get heard all kinds of stories. I mean, we heard one story. There was a lady who, her son, grown adult son, lived at home, was, telling her, hey, you need to invest in this asset. You need to invest in this asset. And, it's just everything in between that you can think of. It was, we saw people that we follow on social media talking about like, it's official. Mom just asked me today what Bitcoin was. So it got into full swing mode, and it did. It was one of those things where I felt just as a financial professional that gives advice, and we try to guide people in making sound decisions. I wanted to put something out there, throw my pebble in the pond, if you will, and just say, hey, pump the brakes before you go get out a second mortgage and try to buy this thing.
Right, and we do think that the blockchain technology is interesting. It's completely new to us as of last year, and trying to learn a little bit about it. It's not a knock on the technology itself. It's more, our conversation is really about the pressure that people feel to buy or to invest in something from without having a full kind of understanding of what the risks are, and there's no free lunch. No,
there's no free lunch, and I mean, we weren't in any way. It was never a knock on blockchain, because the more I read about it, I thought this is really, really cool, and I think that blockchain technology in itself is here to stay. But I kind of used this analogy a lot when we were having Bitcoin conversations. Like, when the 8-track tape came out, I mean, that was like revolutionary, right? I mean, it was, oh my gosh, you can take your music with you, mobile 8-track. And now, I mean, I washed my car today, and I happened to notice that I have a CD player in my car. And I'm like, when's the last time I had a CD, period? I stream everything. I mean, if you're listening to us, you're probably streaming us through your phone or through Wi-Fi connection somewhere. I mean, we don't even physically take those things anymore. So I'm just like, if blockchain technology is that new, why are we going to say that Bitcoin, the first permutation of it, is like, oh, that's going to be the one that's here? In a lot of ways, if you follow that space, you see continual evolutions. I mean, there's another blockchain, Ethereum, that's come out. We've seen many that have come, risen and fallen into the ashes already. So it's just something that's like, it's very neat to watch, but it's also one where I was trying to say, hey, tread lightly, because we could really mess ourselves up.
Hey, risk comes at you fast, and we tend to hear and see reported a lot of the success stories, the early success stories. Oh, yeah. The counter to that is we don't always see the fallout. So we have this sort of fear of missing out on the front end, but then the reality doesn't always get carried through. The same media attention doesn't get presented on the people that lost money. And so I think it was important. I saw an article on Forbes recently. It said Bitcoin slips under 6,000 as route resumes, here are the horror
So even that
stories.
article's dated if it's talking about 6,000 being the price marker.
Right. And so it highlighted a few folks' experiences, and one of the gentlemen had actually posted an installment loan that he took out to invest in Bitcoin. And in his words, he's down about 85% loss, and basically just said, hey, look, I hope this gives you a lesson. It looks like he had borrowed about $110,000 to invest in the asset.
Wow.
And so, and he's kind of said, hey, listen, I want this to be a warning sign.
Wow.
Take heed. This is what happened to me. He's like, basically, I'm going to be, working for free for the next 3.5 years to pay that note off. And so those things don't get discussed as often, but they're there.
Yeah, they tend to come out after the bridges have been burned. And then it's like, okay, they're, the media, will sift through the wreckage and say, okay, who got totally destroyed by this? And, the interesting thing about that, now that I think about it is, my belief is it probably would be very easy to find all the folks to raise their hand saying, oh my gosh, I made $1 million, because they're going to be basically affirming their genius of picking it, right?
Right.
But how many people are going to raise their hand and say, you know what, I lost 80% of my money.
Right.
Or I took out a home equity line of credit and I got obliterated. I doubt that there are a lot of people that are willing to sign up and say, yeah, interview me for that. Let me win Bonehead of the Year, right?
Well, I remember at the time that you posted this, we're sort of in the midst of this furious mania.
It was crazy.
Headlines and people talking about it, and other.
It was taking over the world.
It was taking over the world.
New currency.
I thought that it was a pretty bold article at the time.
Yeah.
Because all of the impetus seemed to be on how do you do it.
Oh, yeah.
Versus folks just saying, hey, let's pump the brakes.
Well, one, it's like, okay, the vast majority of people could not even explain what it was. They could not explain the technology, how it would be used, how it was going to actually bring value to people. I heard everything. I heard people saying this is going to be the new internet currency. We're going to, a currency with no banks, no banks. We don't need banks. Not going to pay taxes on it, And I'm sitting there, I'm thinking like, okay, so let's play this out. You've got, you've made millions and millions in Bitcoin, right? In your Bitcoin account, and you decide you want to go buy a Lamborghini, right? I think some dealers were actually starting to try to figure out how to accept Bitcoin, because at the time it was like, well, if this thing's going to go to 50,000, I'll take it, sure, right? But it'd be interesting to see how many of them still do. But you're thinking like, okay, if you're going to convert your Bitcoin to dollars, US dollars, that's going to show up on the map when you like stroll into your bank and make like a $500,000 deposit. Like, where did that money come from?
Well, one of the other things.
So I loved it when people said they were not going to pay taxes. It was great.
Well, the IRS, the government may be shut down as the date of this recording of the podcast, but your taxes are still due.
Oh, yeah. You better be ready. I've already had a couple people ask me, and I said, you better be ready to pay.
I think one other element that is kind of forgotten is because it was so new, the regulatory agencies hadn't really had a chance to kind of digest and process this. And these main exchanges charged really substantial fees.
Oh, a lot of fees.
It was somewhat,
but people didn't care,
right? Because it was going up so fast. It didn't matter if you paid a 5% fee on your exchange.
Right.
You were making money at that time. So that was the theory, right? And obviously we know the people who lost money in their transactions also paid hefty fees as well.
Well, I think in hindsight, obviously hindsight, is always tends to be 20/20. And I can't say always, but it does tend to give us a lot clearer view of what was going on at the time. And I think there are a lot of lessons that can be gleaned from that experience. One is, Bitcoin is still around. It's not worth 50,000. I know there's probably some true believers out there that still think, oh, it's going to go to 50,000, but it's not there. But I look at all different. One is like, hey, should you invest in something that you don't understand? That your only method of making the decision is, well, look at what the price is doing, right? And we saw another bout with that with the recent the marijuana stocks.
Right. Oh yeah.
Like the marijuana is going to become legal, so all these companies are going to be massively valuable. We better get in. But so there's that. But then there's also, in thinking about it, I was thinking about like how the mentality and the mindset of investors tends to work against them. I think of someone, they're thinking about the price, they're thinking about greed, and like, I need to get in because I want to make my little mini fortune. And meanwhile, like the I hate to use this term, but like the smart money, like the big investors that might have been there early, they're waiting on their exit point. Like they're sitting there, they've already determined, like, if it hits this price, I'm selling, X percentage of my holdings, because they're going to begin profit taking. And, as the mania drives that thing up higher and higher. So what I think tends to happen a lot of times is a lot of the big money gets out. And then by the time all the smaller investors that are throwing in all their, their little savings and, money that's a lot of money to them, they get burned because they write it down.
Yeah, it was. It's certainly tough to see that price come down, and knowing that there's probably a good chunk of folks that have lost money. And
well, we know it.
And like you said, it was such a complicated thing to digest and understand.
There were people buying it at 18,000.
Right. So I thought it was really interesting to go back and sort of touch on that, because it was the big Thanksgiving conversation last year. Into 2017, and I don't know if it was so much this year.
No, I'm not sure. I'm not sure what people were talking about. Oh well, I mean, we were in the midst of looks like potentially a bear market downturn in the market. So I think a lot of people were talking about volatility in the stock market, because it was a lot different for 2018 investors than it was in 2017. So that was probably the primary focus for a lot of people. But I wrote the article. I felt like even if here's another thing. If you make principle based financial decisions, doesn't mean that you're always going to be right, but I think it stacks the deck in your favor. So to me, it's like, I could easily write that article about Bitcoin and stand behind it and be wrong, because Bitcoin reached 36,000. That still doesn't mean that it was a wise investment for folks. Yeah, it might have been profitable, but were you really aware of the risks that you were taking?
Right.
And putting money to work, like the gentleman in that article that that he took out the loan. He took out a loan where he's going to pay interest on the loan. Now he might have rolled the dice and won big, but he did it.
Right.
And so that's kind of where I was coming from, and looking at the cryptocurrency space just in general.
Well, there we go. A little recap of something that really took the markets or the media by storm, and was an incredible thing to witness and see. I hope those of you listening weren't harmed by it. And if so, we always want to learn from our behavioral biases, because it's just a fact. We all have them.
Right.
It's important to know what your kind of unique biases are. The same thing I would say to myself. You got to know what your strengths are as an investor, and where your weaknesses are, and try not to be taken advantage of in those situations.
I agree. I think as a final point, one of the things too that I think that we as advisors do bring to the table is that objective, third party, because we all are emotional about our money, right? We're all emotional about our own, and even when we think we've thought it through and we're clear headed, having an advisor that you can call and say, hey, you know what? I've been really thinking about this, and I just want to get your thoughts, weigh in on it for me, and hopefully you got a great relationship with someone you're working with that can be honest and say, you know what, I think that's great, but then what if? Or they could give you a different perspective. I think that's a great thing to be taken from this as well. Cool. So for everyone that is listening, thank you so much. Hope you enjoyed the show. we'll look forward to seeing you next time. Thanks a lot.